Dear students, in this video, I'm going to show you exactly what you need to do in order to master this very simple strategy. In this strategy, we're only going to use one time frame. That one time frame is 1H. So at no point you're going to go to 4H or 8H or 15M or 5M. You're only staying on one time frame. That one time frame is 1H. 1H is very beneficial because it actually shows you what happens in the day, and 1 hour time frame is very good to actually spot and dissect when the market shifts direction. And for that reason, 1H is very beneficial. So first things first, we need to identify our MTPC indicator. All we are going to do is you go into the indicator section, click on it and type multi-time period charts. Click on that. Once you click on that, you're going to get boxes. This box is summarized each day. Go to settings. In settings, go to time frame. In time frame, you deselect all the time frame. Now right here, it should be on 1 day. So this box is going to summarize 1 day of action. Calculation, true range. Then growth body, blue, 100%. Second box, 0. And full body, make it red, 100%. And the second box, 0. Once you do that, style should be ticked. Click OK. So now, each box on your chart is summarizing each day. That is 1 day. That's another day. 24 candles in 1 day. Super simple. Now, I wanted to create a strategy where you don't really have to think. You don't really have to think. You just follow the rules and execute. So this strategy is simply keeping it super simple. Keeping it super simple. And that's exactly what we're going to do. Okay, so if you see that the previous day is blue, like this one, that's the previous day, this is the current day. We need to focus. If the day is blue, we're looking for buys. Nice and simple. If the day is bullish, we're looking for buys. As you can see, the day is blue box, we're looking for buys. Quite simple. If the day is blue, we're looking for buys. Very simple and very straightforward. If the previous day, like on this day, if this previous day is red, then we are looking for sells in the new day. If previous day is this box, then in the new day where we are, we're looking for sells. And so on and so forth. Previous day is red, we're looking for sells. Previous day is blue, we're looking for buys. So that is your direction of buys done and complete. Previous day is blue, we're looking for buys. Previous day is red, we're looking for sells. Nothing complicated, we're keeping it super simple. Step number 1 is complete. Now step number 2 is that we go down to this section over here, 1, 2, 3. 1, 2, 3, click on it. Go to Fibonacci retracement, Fib retracement. Now once you click on it like this, I need you to double click it. Double click, go to settings. So once you double click on it, you are going to see many numbers. It's going to be very colorful. So keep the colors black. Keep all the colors black. You only need 3 levels. Level 0, level 0.5 and 1. Scroll all the way down and make sure that the levels is highlighted. Make sure it is in percent. Labels to the right, top, font size 12, all this be selected. All we need is 0, 0.5 and 1. Levels of the lines, this trend line black and dotted line. So once you do that, your fib should look something like this. 3 lines with a small dotted line going diagonally like this. So what do you do with this indicator? The previous day, you need to drag from the bottom left, which is this section over here. You drag it towards the top right corner of the previous day, and then you drag the box to the right, just like this. From the bottom left to the top right, and then you drag the box into the future like that. That's what we do. So why do we do this? We do this simply to to gauge if the momentum in the Asia session box is a decent one. If the momentum is still bullish, it's still strong, that's the reason why we're doing it. So the Asia box right here should be either on the 50% level or above it. In this scenario, we can see that that's our 50% retracement level, that's 0, and right here is 1. So Asia box is actually above the 50% level, which shows that the price is still very impulsive. Price is bullish. It's going upwards. Okay, so now all we're looking for right now is we're looking for a strong signal when the London session opens. Now I live in London, so my London session, through the backtesting, I have seen that solid move starts to happen when the 7 a.m. candle closes. So London time, that is 8 a.m. close. So when 8 a.m. at 8 a.m. on the dot, that's when we see the market maker's intention. So this engulfing candle right here is the market maker intention. Now pay attention that I didn't draw any zones, any order blocks, any demand zones, supply zones. We are still on 1H time frame, and all we're looking for is the 1H engulfing from 7 a.m. towards 12 a.m. So we have 6 candles. Sometime within this range, we are looking for an engulfing, a bullish engulfing entry. Now, because 1H entries are so strong, typically when we get an entry, that entry all by itself is enough. It's all enough. So we don't have to justify the order blocks like we did previously. You can still do that. So we have an order block right here. As you can see, what happened, the price actually stop hunted the Asia low, went into the order block, and that's the move to the upside. Okay, it's still the same thing, but I want to draw your awareness towards the fact that you don't need to be focusing on the order blocks, because sometimes they don't get reached, sometimes they're broken, sometimes things happen in the market. But what is more solid are this 1H engulfing candlesticks confirmation. They are solid on 1 hour time frame. With this strategy, you can be getting a regular 2-3% a day regularly. Okay, so next step is Fibonacci step 2. I have explained to you what that does. Now also the Asia session box, you should have it. It's the kill zones. I need you to go into the London session, display London open. Now mine is 0200 to 800. This is not the Asia box. Asia box is right here. This is the display London open. So as you can see, there's these two horizontal black lines. One here, one here. That's what that is. So it's simply a guide for me to know. So somewhere within this range, I need to get my signal. That's all that is. So somewhere in this range, I am looking for there to be a bullish engulfing or a bearish engulfing. So right here, you can see that we had a bullish engulfing within this range. Okay, that's what this is. London session, display London open. So mine is from 0200 800. You are going to have to tweak yours according to where you live in the world, but it is basically after Asia box finishes, one candle is not within it, but the 7 a.m. candle, that's where the range should start from, going all the way till 12 a.m. So 1, 2, 3, 4, 5, 6. Okay, somewhere within this range, we must have our signal, and that is what this 2 horizontal line is. So, and then step number 3, I've already showed you that we need to find and identify a 1H engulfing. 1H engulfing is a strong signal. Sometimes you will get stopped out. That's part of the game. However, I've backtested this for 2-3 years in terms of backtesting this strategy, and more times, you know, the success rate of this strategy is very good. It's very good. You won't get as much false signals, and even if you do, that's fine. Let the numbers play out. The law of averages will be in your favor, because 1H signals typically show you market direction and the intent of the market makers. Okay, sometimes the entry happens early, sometimes they happen towards the New York session. Okay, so wherever you are in the world, you can actually enter this, use the strategy, and become profitable. Alright, so right here we are on example number 2. Bullish example number 2. So first of all, price is going in the upwards direction. So the price action is bullish. We are focusing on the previous day. The previous day is blue. What does that mean? That means that we are only looking for buys on our current day. So step number 1, MTPC is blue, so we're looking for buys. Step number 2, draw the fib from the bottom left towards the top right and drag it like this across the new day. We can identify that our Asia box is actually above the 50% level, showing that the price has a bullish momentum. Okay, and step number 3, we are looking for a 1H engulfing that happens within this range from 7 a.m. going towards 12 a.m. Sometime around this section, we're going to look for a bullish engulfing. So we had one entry over here and we had another entry over here. Enter the market. If you entered around here and you're seeing that the engulfing is still quite small, aim for 3 or 4%. If you're seeing that the engulfing is quite huge, like this one, that's a huge engulfing, aim for 2%. Okay, huge engulfing, aim for 2%, small engulfing, 4% or 3%. Okay, so super simple, keeping it super simple. Alright, so here we have example number 3. Bullish example number 3. Once again, the price is bullish. Previous day, which is this day over here, is blue. We are on this day. Blue box means that we are looking for buys in the new day. Step number 1 complete. Step number 2, we draw our Fibonacci retracement tool from bottom left to the top right, and then we drag it across the new day. We can see that our Asia session box, which is in gray, is above the 50% level, so that's good. Step number 2 complete. And then step number 1, we identify 1H engulfing. 1H engulfing entry right here. That's our entry. This engulfing was quite strong and powerful. It was actually huge. Sometimes I wouldn't enter engulfings that are too strong, because then it may not give me a good risk to reward ratio. But if you're happy with the 1%, then that's fine. But if the engulfing is too strong, then I could wait for the price to come back for a retest. If it doesn't, just let it go. Okay, now it's time for us to focus on bearish examples. So, bearish example number 1, let's proceed. So what do we see now? This is the previous day. That's the previous day. And this is the current day. And this is the current day. Oh, we didn't get a good engulfing entry, but you know, still gonna go through it. What do we see? Price is bearish, so we'll have a bearish order flow. What are we looking for? Previous day is red, so therefore we're looking for sales on our current day. So we obviously had 1H order block right over here. Price went into it, and let's see if this is actually a color change. I mean, you could enter on this candle over here, but a much stronger signal is when we get a color change engulfing like this one. So we had a doji, and finally we got same color engulfing, which I'm not quite strong, but I'm sure on M15 this would have been a fantastic entry. But I'm just showing you this from a perspective of a 1H. On a 1H, we didn't really get that much of a strong signal. But steps are still the same. Step 1, MTPC. Step 2, Fibonacci. Step 3, 1H engulfing. Okay, so there are times when you are not going to get an an entry, and that's totally fine. So right here, the day was bullish. Asia box is above 50%. So around this section, we are looking for a buy signal to push the price up. Did we get a buy signal? No, we didn't. We actually got a sell signal and price went counter trend. One thing that you have to understand is that price moves up and down in waves. It moves like this, up, down, up, down, up. So at this point, even though we're looking for price to buy and continue to go upwards, price could easily give you a bearish engulfing and just continue to go down. So if you're comfortable, I will teach you about this in the future, but you can take trades counter trend towards your demand levels. But in this session, I'm just teaching you how to follow trend, nice and easy, keeping it super simple. So we had no signal over here, but we did have a strong bearish engulfing candle. And what did I say about super strong engulfings? You can wait for the price to retest. This is where the price retested the supply zone. From here, enter, and then price sold, counter trend. Now let's find more engulfing. Let's find more bearish examples. Okay, there we go. Bearish example number 2. What do we see? What do we see? This is our previous day. This is our current day. So this is how you would have seen the price actually happen. Previous day is red, so we're looking for sells on the current day. Now, pay no attention to the color of your current day box. Don't worry about that. That is totally irrelevant. The only color you're focusing on is the color of the previous day, and it's red, so we're looking to sell. As a matter of fact, once you have identified your directional bias, all you have to do is, if you want, remove the MTPC entirely, and now you have a clean chart. Okay, so typically what I would say is that you look for an order block, and all that still stands. This is nothing different. It's just making you aware of how to catch trades easier. So we have our order block here. So all we're waiting for the price to do is stop on this Asia high into that order block and then drop. Now we're on the 1H time frame. It's much easier to catch trades on 1H because you're just looking for one signal. There you have it. We have a partial engulfing. This partial engulfing did not overtake the previous, the low of the previous candle. Not the best, but listen, sometimes things that are not the best still work out in our favor. And that was the move to the downside. So you have to weigh up the risks. But either way, that works nicely. Step 1, MTPC. Step 2, step 2. Step 2 is, let's see if the Asia session is on or below the 50%. As you can see, the Asia session was literally exactly on 50%. So that's fine. As long as the Asia box is not somewhere around this level, then that's fine. Because if it's here, then this means that price has broken all these structures to the left. So that's the reason why. It should be around 50%, not too high towards this level. So that's fine. And then step 3, we got a partial engulfing. And example number 3, bearish example number 3. Price is bearish. Order flow is bearish. the previous day box is red. So on the current day, we are looking for sell signals. MTPC is red, so we're looking for sell. Step number 1 complete. Step number 2 is we get our Fibonacci tool, draw it just like that. We can see that our Asia box is below 50%. Price is still trending downwards. Very good. And literally, as soon as the London session opened, we had a powerful 1H engulfing signal around here, and price just dropped with volume and continued to go down practically the whole day. That right there is 7% easy. So in this session, I've shown you 6 examples on how to trade price in bullish examples or in bearish examples, all on 1H time frame. Do back test it. Send me all your questions. There's going to be more follow-up videos where I break down more detail, more examples, and it's all going to work out as long as you're dedicated to the process. Thank you for your time. I'll see you guys in the next one. Take care.